Hello everyone. So quick update. First thing is I have got out of Autotrader. I decided back on Thursday. I actually wanted to make this on Friday night. It's now the weekend, so markets have shut for the week in the UK. But Autotrader ended up still going through this sort of middle range. So it was a bit up and down, very thin. And obviously on Friday, it then had a high of 645 and ended up closing around 640. Whether this would end up to be a symmetrical triangle, it looked less and less likely, I'll be honest, and was just going through the motions for a mid-range. It could decline from here, but Carnival came up, and Carnival had a significant loss day on Thursday. In the first parts of trading hours, it actually ended up to be positive, but for most of the market, it went down, and it actually got down to 1467, which is very interesting. I got in at around 1480, so the market towards the end of Thursday's session went to 1528, so reasonably solid, and on Friday it had a decline. And Carnival in the UK correlates pretty much with Carnival in the States on the US share market. So I am holding out until it makes a third range in terms of upward momentum. If you have a look at this pattern here, hopefully I can do this. It's going up and down in cycles, right? Below the moving averages, going up, back down again, going up, back down. I think that it will end up hitting over the 1600s again, possibly within the next week, could be a week and a half. It may even go to 1630. From my entry price, that's almost will be near 10%, which is significant. So I'm going to hold out on this for a little while. I copped a bit of a loss on Autotrader. It ended up to be around 420, which is just a bit over 2%, and almost 1% of that came from the dividend that was paid out, which I've talked about before. The markets last week overall didn't do that great, and there was a bit of talk about the US market having a correction. A lot of analysts came out and said a correction's due and 10% correction may be likely, and we're warning investors to rebalance their portfolios. I heard someone say something which I thought was really interesting, and I thought it's really spot on, because a lot of the time there's talk of there's going to be a correction or there should be a correction, and it only happens after the fact of the market turning. Does there seem to be a reason why? The reality is nobody can predict what the market will do down or up, because it's based on hundreds of millions of different people playing in these markets. So the idea that we can determine what is going to happen, I don't like that. You just got to watch. But something was said from an analyst on CNBC.
The rally, but it could end badly eventually. So, okay, I'll ask you this, Josh. Is it time to get negative, or is it time to say this too shall pass?
I think it's time to say I hope they take them down, because market is plus 18% year to date. And I probably don't have as much stock as I want to if this rally is going to continue. It's the only rational mindset, unless tomorrow is the day that you're cashing out your portfolio. So I really don't see a problem with us having some sort of September or October tremors. Like, that happens all the time. I'm rooting for it. It's a better opportunity to buy than higher prices, and nobody should be shocked by that outcome. On average, we're off 10% from highs every 18 months or so. So, like, nobody should fall out of their chair if and when that happens. The thing that causes it, or whatever cause we assign to it after the fact, will probably be something scary, something like the Fed made a mistake or the move variant or whatever you want to say. But it's those times that we say this too shall pass. So I think there's always risk every day we wake up. I know that might not be the most satisfying answer, but strategists have been putting out notes about the potential for a correction every month of every year of every decade forever.
More recently,
and
too.
that should not dissuade people from being invested.
So you heard Josh from CNBC. I listen to CNBC from time to time. I'm not affiliated with them, but it was just interesting comments. And he was saying effectively the markets always have these little dips and the news will often put a heading for it. Is this going to be a major catastrophe? And the simple answer is, unless there's a major catastrophe with economic news or policy, generally it's just a little blip. And I think this is proven here by the S&P 500. If we have a look, again, it's done the same pattern. Time and time again, exactly on the moving average, right here. We can zoom in. We can see it's almost a repeat of what happened in August. And if we go back, we can then see what happened in June. And then we can see what happened around May. And then we can see what happened around March. April didn't have it. But the last 3 months have had these consecutive pullbacks. Let's go with the FTSE. FTSE is not quite the same. So it's leveled off completely. And in fact, it's gone for a second downturn. And if I zoom in, it's now range bound, possibly. It all depends. If it breaks through down here, but holds on near, that'll be the 200 moving day average, then it could be range bound. But at the moment, it's in this little peak area between 7,200. We've got 7,6,900. So I don't really know what's happening with the FTSE at the moment. Similar to the US, although it's really metered off quite a lot here. So it's backed all the way down into the range of around 7,400 from being of highs of 76 and in the middle range of around 75. I'm guessing this will again repeat itself and look to hopefully get up to that 7,800 mark maybe by the end of October, early November. Overall, economic data looks good and the markets look okay. So I'll try and do another update on Tuesday, give another day of markets, and we'll see how Carnival is going.